Hey folks, and welcome to the Pipnotic Symposium for the 2nd of June 2023. Today we're going to talk about buy and sell zones. Algo Trader is going to show a little bit of the information that we've been trying to massage into it, some of the new functionality that's coming out pretty soon, just so you know what's headed your way. So for existing users, as you know, you've been using it in mode 1, but there have been 2 new modes added, mode 2 and mode 3, and I discussed the different mode types in a previous video, so I won't go over too much detail, but I have added a few more features that have been very beneficial regarding reducing risk, and this is moving stops and trend. Okay, and the reason that it's pretty good to have this information built into the software is because, I mean, sometimes you have a trade that moves 1-to-1 risk reward and it's in profit, or even 1.5, or even 1-to-2, and then it comes back and gets stopped out. And that's just a real shame, because you don't want positive, profitable trades going bad, because things do change. So you have a long trade that's open, the sentiment is bullish, and the trade is open for so long that the sentiment or the data supporting that currency can change, turning it around, resulting in a loss. And that's kind of a real blow. And so what we're doing now, or what I've done now, is that I have changed it so that stop losses are activated when price moves a certain amount of distance towards the target. And so in the current configuration, the default configuration, what's going on is we have a stop loss here, we have the entry price, and we have the target here. What the software is doing now, it's looking at current price relative to the target and the entry, and as soon as price moves, let me go down to a smaller time frame so it's easier. As soon as it moves a certain distance towards the target, in the default configuration, it has to move 50% of the distance. And so if I move this so that current price is 50% between the entry and the target, as soon as this happens, the stop loss will get snapped back to break even. So if I keep moving this till we get it pretty close, nothing happens there. If I keep doing it, or if price goes up, of course I'll do it. If I put it here, as price kind of wriggles higher, gets closer to the target, at least 50% of the distance between the entry and the target, then the stop will go to break even. Let me go down to a 1-minute chart so we get a little bit of clarity. So if I move this a little bit further down, so now you can see that we are more than 20. Price is really racing lower. So price is really racing low. So if I move that so that we get very close to that, prices come up to this. There we are. Okay, so there you can see that the stop loss moved to break even. Okay, and that's because typically what happens is that you get a position, and most positions, probably well over 80% of the positions, I mean, they'll move nicely. You have your entry, you have your stop, and you have your target up here somewhere. And prices often kind of move away. They often do, but sometimes they come back and then they stop you out. And isn't that a shame? That's really annoying. Knowing that you had a nice position that was was in the green, and then you had prices that moved, like 1-to-1 perhaps, and you have 1-to-2, and let's say you have a pretty big target, okay, here. So what happens is prices will often go up and not quite get to the target and then come back. And so when price gets 50% from here to here, 50%, well, this depends on the configuration, but the current configuration is 50%. So if price comes up to there, the stop loss is moved to break even. And I think that's just a pretty nice way, a pretty simple way to fix that. And I've had many people talk about this, the break even stop and trailing stop for a long time. So it's about time I did it. And I had a bit of a push from a couple of guys, Andrew and Anas and several others actually, and so I just thought it would be just a pretty good idea to get it done. So now it's done, and that's coming out again in this new version that I'm currently working on. So that's working nicely. Another thing is the trend. Sometimes you want to trade relative to a trend. So what is a trend? A trend is actually a pretty difficult thing to quantify. What you can do is you can quantify a trend based on moving averages, which is a pretty common way to do it. So you have a downward sloping moving average. What does that mean? Well, that means that prices are going down. Okay, but you can also have kind of bleeding edge changes when you're focusing right here. And something that's very important is when prices are closing below the moving average, that means that the prices are indeed negative. Once they start moving and closing above the moving average, like you can see here, well, then things are probably changing. You can also see actually that the market structure has changed as well. So we had a low, high, low, high. We've moved above this high. So technically we are in an uptrend also because this goes like this. So we have the first one, jeez. So we had the first one here, the second one, and we had the third one here. So we've moved past one high, two highs, and now prices up here, okay, off these three lows. Okay, so I think it's pretty clear that we are in a shorter term uptrend. And so what I want to do in a situation like that is I want to be considering long positions only. I don't want to be selling here. I want to be entertaining, or rather considering the fact that prices are probably going to move up and away from here. And so another thing that I'm doing is that this is something I'm just experimenting with, and that is that sometimes you'll find that you'll have a nice area of supply or demand. As a matter of fact, I'm just going to flick this on in the default settings. I'm going to enable the trend. It's going to go like that. Just going to put it on. I'll put it on the 30-minute chart. Okay, now I'm just going to flick that on and let it open a couple of pending orders. Okay, so here we have a couple. Let's look at the first one. So we go like that. Okay, so what the software is doing now, it is looking for entry prices. So the entry price would be here, and the stop is down here. Okay, so stop, entry, target. And what it wants to see, what the trend indicator wants to see, we want to look at the this moving average, which is a 100-period moving average. It's nothing rocket science. I'm not trying to find the special ratio or the special number, 37.5 periods. That's all nonsense. It doesn't matter what it is. It just has to be big enough to include a significant amount of price. Okay, you can see that prices are moving higher and the moving average is moving higher. Okay, this is all we want. Okay, so when we're closing above price like we're doing, and we have an upward sloping trend line, well then prices are probably going up. Okay, if we have a downward sloping trend line, okay, and prices are closing below, well then prices are likely moving lower. It's super simple. Okay, so this is what it's looking for. Additionally, what it's looking for entry prices that are in the vicinity of this moving average. And the reason it's doing that is because if we have a moving average here and prices are up here, we have an entry to buy up here, and prices is really far away from the moving average, and we move up, okay, and then we want to buy here at some stage in the future with a stop down here. That's really, really far away from the mean. Okay, and the same for a downward sloping trend line. When we have a negative trend, okay, and prices are closing much further below, we form an area of supply. Prices leave, prices come back. There's a pretty high likelihood that prices are going to revert to the mean. Okay, from here and also from here, it's likely that prices are going to come back to the mean. This is just a common behavior. So when prices deviate from a mean, they'll often come back, either from a positive deviation or a negative deviation. They'll often come back and revisit this historical mean. This is very, very common behavior. And so what I want to do, we have an upward sloping trend line. Prices are closing above we want to take trades that are around the mean. Okay, and so this is what the trend indicator is doing. And I think that's just a really good idea. At least that's what I'm going to try. I'm going to try and test this hypothesis and see how we get on. But I think that makes perfect sense. So we have two. We have another one here. Let's see what this is. The first one is a buy. The second one is a sell. Here's the sell. You see the moving average is in the vicinity of the entry price. Okay, so that makes sense. That means that, if we would have formed an area of supply just here, for example, and expecting prices to go into it and then move away, we are quite far away from the mean price. And so the whole concept of boxing that we all know and love is that if prices are high in the box, what does that mean? Well, that's pretty much the same thing. Prices are trading very far away from the mean, which is a moving average. I'm not saying that the box is a moving average, but the middle of the box is like a mathematical representation of an average price between these really high prices and these really low prices. Okay, and so the moving average, when it is in the vicinity of buy and sell prices, just as a higher likelihood of prices respecting those before they continue either moving higher or lower. Okay, so this is something that I'm currently working on now. Let's put it on the hourly chart and see if we can grab a couple more trades we can look at. Okay, so here we have a couple. Got this one on the hourly chart, and so here we have an area of supply. Have that moving average right there. So we expect prices to revert to the mean, the moving average, once again representing that mean. Expect prices to come back to that before they either do this or before they do this. Okay, this is super common expected behavior. And then we have another one here. Let's look at that, see what that looks like. And this is a buy. We have the same thing. We have the buy area here. We have the mean just below. Okay, so prices often respect these mean prices quite nicely. Not always, but often. And so it's my belief that if price comes down to it at an area of demand here, here, okay, that we're probably going to see some kind of respect for it. I don't know if that's true or not, but this is just something that I've observed over the course of, well, quite an extensive period of time. So this is something I want to put to test. So this is actually what we're looking at now. And if we click on the 4-hour chart, we'll see if there are any 4-hour entries that we can toy with. And right now it's scanning all of the symbols in the market watch over here. All of these symbols, gold, blah, I mean, all sorts of different ones. And it's looking on these time frames, and you'll notice that there are much fewer trades, and this is because it's waiting for these entries to line up with this moving average. We have another one just here. You can see right here. I mean, by the time price comes back, it's probably going to be above that, so price will have to move through it in order to continue. You can see, look at all the respect for this moving average historically. Oops, a little bit bad. Ooh. Okay, so there has been respect for it. Okay, we're not trading the moving average. We don't care about the moving average. We just want to be trading at like a median price for the highs and the lows. So if we were to look at like a deviation from a mean, this being the mean, I mean, this would be, for example, +1 deviation, and this could be, for example, -1. Okay, so this is a 1 times deviation from the mean. This would be 2 times, and +2 here, and this one here would be -2. That looks like a 7, but it's actually a 1. Okay, just down here. And so we could go even as far as to say, well, what about a deviation from that mean? If prices manage to come down here and we find demand here at the -1 or even the -2, well, this would be a really good level, because we would expect prices to what? To revert to the mean from the -1 or the -2. Likewise, we would expect prices to move back away from the +1 and the +2. So this is just something that I'm toying with for the time being, and I think that could be a very interesting study I'm going to get involved with pretty soon. But yeah, so that's what we have. And so what I'm doing is I have it running now on 3 accounts, and the beta test group has it running on loads and loads of accounts. And so we're getting a lot of really cool data. So I think we're going to have something pretty reasonable pretty soon. And sorry for the delay in getting this update out. It's just it's a pretty complicated release because I'm adding so many new features in one release. Normally the update that I'm releasing would be comprised of maybe 2 or 3 individual updates, but I'm kind of bundling all of this into one because I really want to get modes 2 and 3 out. And I think that the trailing stop or the break-even stop combined with the trend filter would just be a really, really good way for us to have a very robust and solid version of this trading algo. So that's where we are. But if you have any questions about buy and sell zones, let me know. If you have any comments, let me know, and I will get back to you as soon as I can. Thanks for watching.